Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So currently market, as you can see, shows its upward performance. It looks not bad actually. The pattern that market has completed is just a intraday double repo buy that we discussed on our chart. Potentially could trigger the upward pullback, and at first glance it seems that its story about the downward action is over. So hardly we will get 2050 area that we have discussed and which we treat as very attractive for at least for attempt to make long entry around it due to the current performance that we see. As you can see, market returns back inside of the triangle, but I'm still wouldn't hurry up with the conclusions. So I think that it's not over yet, especially before the Fed statement. Everything could happen because, as you can see, market shows very inconsistent reaction. Actually, it seems that something was broken on the market analysis and market sentiment, since once data has been released in a supportive to United States dollar, euro currency starts rising, believing that Fed will protect those who trade against the dollar right now. But within a couple of sessions, they have scared something, and everything has turned down on the fear of the rising inflation, that indeed the recent statistics could lead to some pressure on the Fed that will make them change the statement, theoretically. So we have dedicated lots of space in our vehicle report to this subject and come to conclusion that we should not expect something really drastic from the Fed until the September. Still, fears already stands on the market, and that will keep euro under pressure for at least until the statement will be released. And in the current performance, I think that we need to keep an eye on one level on the intraday chart that could provide us some clarity on the perspective whether we should forget about the drop to the 2050 or chance to reach it still exists. Because currently, guys, trend stands still bearish here. We have the divergence between these two tops, and usually divergence, at least by the classical approach, suggests drop below the low between the peaks of that's forming the divergence right here. So that means that market should drop somewhere to the 1980, or in our calculation it should be somewhere in 1720, 1740. That's the story that we talked about a couple of weeks ago on the weekly report as well. So we are considering upward butterfly on the euro currency, possible head and shoulders here, and that's the level that theoretically still could be reached. But first, let's take a look at this level and what we need to control, what level we need to keep an eye on to make the judgment on whether downward action still will happen or euro really could proceed higher, ignoring this level and just turning up. Let's take a look first on the fall time frame chart. Here's some exists some irrational price behavior on the market. What I'm talking about, first of all, if whatever target you will calculate, this ABCD pattern, this minor ABC top D pattern, and any pattern, market hasn't completed the major target. You could argue that market has completed the OP. Yes, indeed, market completed OP. It has shown the pullback. Since it was not able to proceed higher and show the reversal, it means that the next logical destination point is XOP, is 2038. The same story we could talk about the butterfly. Say about the butterfly. 127 extension is completed, shows the retracement. Market wasn't able to reverse up finally. It collapsed, which means that the next destination point is 1618. If you calculate the ABCD here, you'll see that the OP that stands around 2073 approximately also has not been hit. The only bullish sign that you have here is some kind of the bullish divergence that's forming right now with the MACD, but I suspect that is not enough to make the decision on taking the long position immediately. Market currently is struggling with the 2140 area. I personally suggest that the major level here is to consider is 2170. This is confidence resistance, and this is a historical support resistance area, as you can see. It's right here. It was resistance, support again. Yes, it was here. It was spiking, broken a few times, but you could see visually that it holds by the market pretty nice. So you can support again, break out. So it was resistance, then again support. Now it will be resistance again. And also this is confidence level. If market will break it up and start turning higher, erasing this recent collapse, this will be the break-even point, break-even moment, because by the technical picture you could see the strong sell-off stands here, here, and here. And currently, with the uncompleted targets on the back, it is very tricky to consider this action as a reversal. From the technical point of view, with all details that we have just discussed, this is just the pullback of the sell-out that has followed on Friday. And from that standpoint, it will be very interesting to see how market will react on this level. I suppose that there's really big chances that we will see the touching of this level and turning down again, right to the 2050 area. So from the current technical perspective, I wouldn't consider taking the new long positions, and we'll be watching for this level. And I think that the 2050 it still stands on the table, so it still could be reached if market will not be able to break through this level. Additionally, if you'll take a look at the hourly chart, you can see that here is our double repo who's worked just perfect. This has been formed. Close above the 3x3, few spikes here, no close below 3x3 again, and this market just keep going higher. So double repo already has completed, so it means that it has reached the new minimum target, but market could proceed higher. Here I would consider the XOP target, because with this ABCD pattern you can see a very good dynamic to the upside, some acceleration. It means that market definitely hits the OP 2150, but since we here see some very good pace, I would consider XOP. It's very probable that market with this upward direction hit the XOP area around 2172. So if you have taken the long position based on the double repo, you could keep this position. Once XOP will be reached, we will get Garter's triple to sell pattern here, and XOP creates agreement with this confidence resistance area. So it will be very strong level. If market bearish, it should not break it up. So this level strength is enough to hold any bearish market. In the case of the upward breakout, it tells you that market is not bearish. And here, after the breakout, you could start thinking about taking the long position. For instance, if it will happen, we could get some kind of, I don't know, something that looks like the hand short. So this would be left shoulder ahead after some pullback or tracing back to the 2170. That might be the chance to go long, to take the long position. Until this will happen, it is very tricky to take the long position in advance of this event, especially with a common Fed statement with a few sessions. So that's our opinion on the euro currency.